So apparently YouTubers really love telling us how many income sources they have. Rachel here got 8, Natalie got 10, these guys got 11, they got 12, and Nate over here has 13. But I think I've got them beat because here are my 15 different streams of income. And yeah, I know only these 3 count, but I can now officially add a 4th income stream to my list because a couple of days ago I evolved into a YouTube partner and my channel is now monetized. It only took 107 videos and 1,180 days, but seeing all these green dollar signs make it all worth it. But because I'm still a small channel, I'm not expecting to earn a killing from YouTube yet. Even Social Blade estimates I'll earn between $2 to $6 a month or $19 to $307 a year. Hardly life-changing, but knowing that the channel that I started to document my investing journey is going to help fund my investing journey is very cool. And fun fact, YouTube estimates I made a whopping 46 cents last month, but going back to Social Blade, let's say I only made $307 annually for the next 30 years. At a 10% average stock market return, it means that the $9,210 I'll put in is going to compound into $50,500. But regardless whether I make hundreds or thousands or millions of dollars a year from YouTube, I promise to tell you guys exactly how much I'll be making in my monthly update videos. Speaking of which, let's jump right into my February 2022 update. First I'll go over the numbers here and then I'll show you some changes I made to my stock portfolios. And I was starting to get sick of all the red, so I brightened things up, and as I had the benefit, it's now easier to differentiate the columns. But starting with my portfolio balance, I ended February with $45,958.91, which is down 1.71% or almost $800 compared to the previous month. My loss is actually way worse because I deposited $1,777.43 throughout February, but because my portfolio still went down, the total loss is actually $2,575.98. But as hard as it is to believe, I actually don't really care because I'm just buying the dip and I'm scraping more cash together to buy the dip on this dip. That's what I want you to remember. If your investing horizon is decades into the future like it is for mine, these monthly or yearly changes, they don't really matter in the end. For example, this is my oldest portfolio and the 1 week, 1 month, and 1 quarter all look terribly red. But if you go back all the way to the beginning, this crash we're experiencing right now is going to be just another bump in my investing journey. I check out the 2020 crash right here and how much we're up since then. So, you can be like Meet Kevin and buy and sell based on what the Fed says or what the news headlines, the Wall Street Journal, New York Times says, or you can be lazy like me and just buy the dip because these monthly changes, they won't even register in the next 20 or 30 years. It's kind of funny that it's physically impossible to make a video without bringing up Meet Kevin. But anyway, I received $12.33 in dividends in February from these stocks, and thanks to all the buying the dip, I finished February with only $2.17 remaining that's uninvested. And because I love tweaking this spreadsheet, I decided to change my performance column. It used to look like this with my lifetime and annualized percentages laid out, but I decided to highlight the 1 month and the 1 year return of my portfolio gains or losses. And I'm using that instead of my portfolio balance since my deposits can skew the results. It's not looking good right now since my gains are down almost 31% for the 1 month and negative 22.43% in the past year. But like I mentioned before, going back further just means I'm still in the green, up 14.35% since I started this investing journey in 2018. And looking ahead, if my portfolio grows at the market average of 10% per year, it'll compound into $801,917.64 by the time I turn 60 years old. But hopefully with all the weekly deposits I'm putting in, this figure will be instead in the multi-millions, so fingers crossed. Finally, we have some YouTube stats, finishing off February with 1,108 subscribers, and even though YouTube is estimating a 46-cent payout for February, I'm only going to update the numbers here when the money starts getting deposited into my bank account. So that's it for February 2022, but let's now jump into my portfolios to highlight some of the changes I've made. First, there's my credit card millionaire portfolio that's funded entirely by credit card cashback. On February 11th, I redeemed $52.43 from my Chase card. Then on February 28th, I deposited $25 that was redeemed from my Barclays card that I got as a $25 Target gift card. And speaking of Target, $20.84 was the total for their Red Card 5% discount for the months of January and February. And finally, I put in another $100 that was redeemed from my Chase card that I deposited on March 4th. And one more final updates, I promise. As I explained in this video, my two biggest stock portfolios, my aggressive pie and my moderate pie, are basically my own ETFs that holds the top 50 positions of VTI and VUG. And all the stocks you see on this spreadsheet is taken from Vanguard's own website at the end of February, and they list the most current positions as of January 31st, 2022. Starting off with my moderate pie, that's holding the top 50 positions of VTI, but I decided to break my own rule once again and I added Alibaba. I mean, what can I say, guys? I just really enjoy losing lots and lots of money. But because of Baba's addition, here are the new changes. Intuit and Next Era Energy was replaced by Alibaba and Philip Morris, with Lowe's being the cutoff for VTI's top 50. And next we have my aggressive pie that holds VUG, Vanguard's growth ETF, and here are its top 50 as of January 31st, 2022. But like I explained in my previous video, I'm still holding on to my original 23 positions listed right here. 14 stocks overlap, which means I have these 9 positions that are going to replace these 9 at the very end, giving us my current holdings for my aggressive portfolio. All this changes means Snowflake was replaced by Striker, and here's the cutoff for VUG. And sure, all this sound like work, but I really enjoy complicating my investing process, and we'll see if creating my own ETFs outperforms the actual ETFs that they are based on. So here's one final look showing the overlap between the top 50s of my aggressive and my moderate pie. And if you appreciate my spreadsheets and can't wait for my March 2022 update video, make sure to hit the subscribe button, like and comment. But I think that's enough talking for one day, so I'll catch you guys all next time with more financial shenanigans.